Welcome to the Insurance Brokers Podcast, Helpful Hints. Here we break down the best, most informative bits of our full-length interviews. Thank you for listening to this episode of the Insurance Brokers Podcast. On today's episode, we're delighted to be speaking to Andrew Sparrow. Andrew is the MD of Fidentia Insurance. Andrew has a long and varied history in the insurance industry, and today's podcast is primarily around the impact of COVID, Brexit, and the tech transformations ongoing in Lloyds. Good afternoon, Andrew. Thank you very much for joining us on the Insurance Brokers Podcast. It's great to have you here with David and I.
Good to be here. Thanks for having me.
So we've sort of broadly covered in previous conversations some quite interesting topics that I think would be great to talk about here. And I would like really to start maybe with an overview of you, Fidentia, life as you know it now, how it's changed in COVID, and generally your thoughts on that.
Okay, fine. So Fidentia was a business that I set up with my business partner back in the summer of 2013. We'd previously been working in the Lloyds market for another Lloyds broker, but we decided to make the break on our own, along with some colleagues that worked there as well. Predominantly, we had a book of UK and European business, which we were fortunate enough to bring over with us when we set the new business up, and have developed that in the first 7 years of Fidentia, 7.5 years now, actually. So we're Lloyds brokers. We have cover holder status at Lloyds as well. And then latterly in 2019 and 2020, we successfully set up and had authorised a subsidiary company, a subsidiary broker in Ireland for our European business, which probably around today accounts for around 15 to 20% of our revenue. So that was an important part of the book, and therefore we needed to be Brexit ready. So that was a good achievement, and we were pleased to get that underway for the 1st of January.
Yeah, I can imagine.
Yeah, I was just going to ask before we go into Brexit, what sort of driven your growth in that 7.5 years, Andrew? I mean, it's a great base to bring a book, but how do you start from there to build a business?
Good question. I mean, I think we were lucky enough to have plenty of relationships that existed already that we were able to maintain. So that was obviously a good start to the book. But predominantly, it's been we've identified a few niche areas of business that we've branched into. One example of that is wine. We insure a lot of wine for people who collect and store and use it as an investment, together with wine traders. And that kind of instigated from a long-standing client of ours who was a bonded warehouse keeper, and ended up we did a deal with them, and they introduced us to various of their clients. So that's a sort of an example of a niche area that we tried to develop, and that's grown quite well in the last 3 or 4 years. Other than that, I think our growth has been broadly organic through the classic word of mouth, referrals, recommendations. We have got a few people that have joined us with books of business that they had, where they felt the time was right to move on. We have felt that there's been a kind of a move in the London market in particular, with individuals kind of feeling a bit disaffected with a large broker environment and probably preferring to, maybe try their luck in a smaller, medium-sized London broker, Lloyd's broker. So we've benefited a bit from that. And then generally, as I say, just the organic stuff.
I mean, that's probably the way most brokers grow in some ways. Do you do it proactively, or you have relationships and things just happen, or do you have, do you consciously ask for a referral at every meeting and that kind of thing?
I think that's been something that we've been probably a little bit benign on. I mean, I think, that's probably benign, maybe not the right word, but we've probably not been as proactive on that, driving a strategy, if you like, for new business as we could have done. And that's been something that we've grappled with in recent times. I mean, the last year, with obviously the pandemic and the disruption and the working from home, things have been much more focused about defending and retaining and keeping the renewal book going, because new business opportunities have been stifled a little bit in that period. But generally, we've tried to look at niche, as I say, niche opportunities and push those through. We've had some success. But I think generally, and this may be the case with many independent brokers, we've probably needed to have more of a clear-cut strategy for that. And I think, whilst we've grown well, we've certainly grown satisfactorily, we're looking at that as something we need to perhaps adopt a more structured and strategic approach to.
Interesting you talk about niches, because that is very much the word of the moment. I think a lot of people are beginning to realise that a complete generalist, it's difficult to position yourself with a USP, and then you finish up selling on price, and that ultimately isn't where you want to go.
Yeah.
So you just followed existing relationships and existing expertise and sort of broadened out a niche from that, rather than deciding, I don't know, we're going to go into wine and then finding the expertise, as it were.
Yeah. I think, a lot of these things have kind of, we've kind of stumbled across, I suppose, is probably the best way of putting it. Things have cropped up from time to time. Conversations have taken place with, existing connections. We've tried with some success, but again, something we could look to develop. We've tried the introducer model. So we've identified personnel and people that we know, not necessarily from within the insurance market, but outside as well, that have decent connections, which might fit with the sort of profile of client we're looking to service. So we've tried to open doors on with people that we trust on an introducer basis. But I think generally, David, we have come across things without having pre-planned them and just try to make the most of those opportunities as they've arisen. We're trying to do more of affinity business. We've got one large affinity book of business, which is a decent revenue. But again, that's kind of a bit of an outlier at the moment, and we may be looking to do more of that.
It makes a lot of sense, doesn't it? If I suppose it's being nimble enough as a business to recognise you've stumbled across something and then follow down that track quickly and effectively. That's
right.
This concept of nimbleness keeps coming back in all of my podcasts, and I'm genuinely trying to coin the term nimbility. I think it's excellent.
Nimbility.
It's a good one, isn't it?
It is a word. It must be a word.
Well, if it's not, I'm having it. Yes, I am. Just on that, I did one of the first podcasts I did was with Peter Cullen, and he said, and it stuck with me, and I've had this conversation with lots of different brokers, just be top 3 in something. And actually, because I've done a few podcasts with some of the consolidators as well, and when they are looking to buy brokers, they're looking for specialisms, top 3 in something, doesn't matter what it is. So it's just this concept of niche keeps coming back, and I think it's quite interesting. And my understanding of the Lloyds market generally is it tends to be more niche or harder to place risks and that kind of stuff as well. So it fits quite well. Are you wholly Lloyds?
No, we're not. We tend to use Lloyds more for our overseas business. So, I should have mentioned earlier, actually, we also have some guys within the team that do some North American business as well. They've got very long-standing relationships with cover holders over there. So we do, we tend to use the Lloyds model and the Lloyds market for the non-UK business, and where we've got binders or where we've identified the need for binders for certain books, classes, or areas of business, then the binder model again does gravitate more so to Lloyds. They're much more adept at that. For the most part, our corporate book, our commercial client book, is outside of Lloyds in typically the company market.
Yeah.
And your client sort of profile, one gets carried away with London market, but it's probably not that different to a provincial insurance broker. It's mid-sized companies.
Yeah.
Doing what they do.
Yeah, it can be. Yeah, it is, David. It's corporate customers from very, quite a different number of business sectors. That can be logistics, that can be hospitality, property owners, or whatever. The broad brush of classes, and they can be ranging from 5 to 10 grand premium spend up to well into 6 figures. So it is a quite a broad spread of different client sizes and business sectors. But we also do mid and high net worth private lines, business, homeowners business, and we do, as I said, a lot. The wine thing with the private wine collectors was something that sat quite well with our collectors of other business. So we do art collectors, sculptors, and things like that. So that in the mid and high net worth part of the book was a good fit with the wine business. And again, that's something we've identified we're quite good at. We've developed products and wordings of our own. So, you're trying to make it niche so that you have that little bit of an edge over a competitor.
And when you've designed products and wordings of your own, that then is placed presumably via a binder. You're not trying to negotiate a composite market to use yours.
Yeah, that's right. Yeah, that would gravitate to a binder, a line slip, some kind of facility where you've got that agreement with one provider.
And you find that sort of morphing into the Lloyds market and the ease and the technology changes that are happening there, you find it easier to set up a binding authority with Lloyds than with a company market. I'm guessing because of the niche nature of the cover rather than because the admin procedures are easier, because they're not. Is that true?
I think the driver of it really is the appetite within the marketplace. So, we do have binders in the company market space, but you tend to find that you have to work harder to find the appetite in the company market. Generally, that's our experience anyway. Where you've got something, particularly where it's a new idea or it's something that you're trying to launch, maybe from scratch even, to try and develop a new book of business, you do come across some hurdles in the company market for minimum premium levels because they're not so, in our experience, they're not so adept and experienced on putting binders together. They are much more, it has to be in their sweet spot for them to consider it. Whereas Lloyds does binders much more widely, tend to have a wider appetite base, and therefore, you're actually finding the right market for a binder tends to be in the Lloyds market because of the specialisms and the harder to place business.
Just morphing on that point into sort of the future of Lloyds and the transformations going on there. I've had some interesting conversations around that. Can I ask what your experience and expectations, I suppose, are in terms of those transformations and administrative pain points and things like that?
Yeah, I mean, we've attended, Lloyds has put a lot of effort and resource into the future of Lloyds model, and we've attended a number of the webinars that they've presented. And, it's clear that this is going to be a pretty wide-ranging end-to-end transformation that they're trying to introduce into that market, which is a huge undertaking because Lloyds is known as being a bit of, behind the times and a bit sort of ponderous and slow to react. So they are really having a go at this. From our point of view, it is going to make quite a lot of changes, and it might even result in some brokers, some London market brokers, having to change their operating systems. It might even sort of, the tentacles might even push into how you actually run your business internally, and whether that is going to be an operating system that is compatible with that trade in the Lloyds market. So they're all things that one needs to consider. As a cover holder and as someone that runs binders, again, that they are clearly making or trying to make that easier to trade with them. The presentations are clearly all about digitalising the data, single keying of information, holding databases within Lloyds that's accessible to various parties, various stakeholders, so that it's makes the process easier. The placement processes are being transformed. We're signed up as Fidentia to one of the electronic placing platforms that they've got, which is Whitespace. There are a few others, but we're going with Whitespace, which we have used. And that's actually proved to be quite an interesting, and we were pleasantly surprised actually as to how straightforward that was to place business within that. So, working from home environment, that has been pretty crucial, having that capability. But, the Lloyds, the future of Lloyds model is going to take time. It's probably going to be, I would say, at least towards the end of 2022 before I can get some real traction to get people signed up and trading on it. but it is the way it's going to go. And there's no doubt about it in our minds that Lloyds are not looking to spend all this time and effort only to change it and try something different. I think they're actually going to bet all of their investment on it to make it work one way or another. So brokers have to go with it.
One of the, having spoken to a few people on the various work streams within the Future of Lloyd kind of bigger project, just gives you some idea of how extensive these changes are, and they're looking at every different sort of element. And I was talking to Mike Keating on the LMA DARE 6.6 project.
Yeah.
I don't know if you're a stakeholder in that and getting involved in some of those project meetings.
I am not yet, Sarah, but I have been approached quite recently by an underwriter that we deal with at Munich Re, actually. And he's flagged it. And that's the first time I've actually come across this DARE project. So not something I know a great deal about, but it has been flagged up by someone that is looking to get brokers to buy in on it. But I don't know a great deal about it as yet.
Well, when we put this podcast live, I will have the link to that in it, because we've obviously mentioned it, and I'll send it to you as well, because it just is one of the workflows. But I think it's looking again. I think the word that Mike used was they're looking at blue skies, but in a practical way. So, how can we be drastic, but actually make it happen rather than get stuck in the conceptual planning phase. So I think it's really interesting. One of the things that you touched on earlier, which I'd be really interested to talk about, is Brexit and your planning of Brexit and what you guys at Fidentia have done. And you touched on it earlier. Can you give us a bit more of your thoughts on that and how the Brexit plan is going to pan out for you guys?
Yeah. So as I said before, we've had a long history of placing typically property business, but other classes as well, from Europe into Lloyds. That's been a key part of our book of business and has grown, quite well. So we travel to Europe as regularly as we can to service it. And again, that business comes in typically directly from policyholders to us. We don't tend to get that from introducing brokers or retail brokers. That's not to say we don't get any from retailers, but very, very small amount currently. So we obviously identified that Brexit was going to be something quite impactful on us, and we decided to try to do this on our own. And I understand from feedback in the broking fraternity that, we're actually probably in the minority of brokers of our size that have actually done it without any outside involvement, including brokers buying, a European-based intermediary to just solve that problem. So we set a company up from scratch. It's a wholly owned subsidiary. It's based in Ireland. Our finance director spends some of his time in Ireland. He lives in Killarney in the southwest, and comes to the UK part of the week, and had been doing that for some time beforehand. So it was the obvious place for us to try, and he did most of the heavy lifting on the Central Bank of Ireland application, which took a long, long time. But we finally got there. We got the formal approval for Fidentia Ireland towards the end of 2019. With the withdrawal, the transition period then having been agreed for a further 12 months, that was kind of just left for a period of time. And then we ramped up the preparations in the autumn of 2020, ready for the 1st of January, in the expectation that there wasn't going to be any deal for financial services to carry on with their passporting. So that's now up and running, and we are using that and trading through that with our European business. As far as plans are concerned, I mean, the plan is to bed down what we have at the moment, but we are actively considering talking to brokers that might be, UK-based brokers that may not have enough European business to justify the cost and time and effort to actually set something up, but that might want to have some kind of continuity for those clients they might have in the European areas or European Union. So it's something that we're looking to develop an offering for others as well. Once we bed down our own book of business and look to grow that and get some value from it.
Absolutely.
From a practical point of view, you've presumably now done a couple of renewals through it. how's that worked? Has there been any practical difficulties? I mean, I assume the work still happens in your office in London as it did before.
That's right. Yeah. What we did was we organised what we call it's called in the trade a reverse branch. So Fidentia London becomes a branch of Fidentia Ireland.
Yeah.
So therefore, we were able to set it up in a way that allowed the staff to continue working with the clients that the clients have already been used to dealing with. So the clients saw very little change apart from the name on the paperwork that they were receiving from us. So we did it in a pretty sort of seamless, non-impactful way for the clients. But obviously, it's resulted in second lots of databases. It's a new company, it's a new set of banks and everything else that goes with running a second business. But we see that as a kind of a bit of pain at the outset, not least to defend what we already have, but as I said, to look for opportunities to provide solutions to other people that might be looking for something there.
Are you happy for me to put Fidentia's details in the show notes for any brokers out there that are struggling with that problem now, maybe just to have a conversation with you?
I would have no objections to that, Sarah. I think the only thing I would say is just qualified by the fact that we're probably not going to promise we're ready to service outside business right now. So we don't want to promise something that we can't deliver now, but we certainly are looking to have a proposition ready probably for the spring, at the latest, let's say. And we can, we'd be happy to talk to anyone who wants to, to inquire on what we can do for them. It could well be something that has a value to brokers. As I said, it's a decision as to the upside and the downside, whether you're prepared, whether you have enough business to justify it. And if you don't, what do you do with the business that you want to carry on servicing? And we might be able to help there.
I think that's really interesting. So, I'll make sure that we highlight that, because if there are any people out there struggling, maybe just to be able to have a conversation might be sort of mutually beneficial. So, no, that's incredible.
Thank you.
No worries. In terms of the world we are living in at the moment, and I don't dare mention the C word, and I obviously mean COVID, what do you think the impact of COVID has been when you add it to the Brexit changes, to all of the transformations going into Lloyds? Tell me about how COVID's affected you, your trading, and sort of wider market trends.
Yeah, it's a great question. I mean, I think for us as a London-based broker, possibly more so than regional-based brokers, but certainly not, exclusively so. We've always benefited from having that physical close proximity to the London market, to the Lloyds market, and having the availability of regular face-to-face meetings with underwriters, decision makers, and in the London market, you tend to be able to speak to decision makers in the head office, of an AXA or an Aviva pretty quickly. And the whole working from home transformation, obviously took that all away from us. So we probably lost quite a lot in terms of our ability to actually trade and negotiate as effectively as we thought we could before face to face. So that was a huge transformation for us. But that apart, I think as a business, and probably many businesses like us, maybe had a similar approach, that we didn't really use the work from home model very much before March 2020. There are 15 of us in the business, so it's not a huge business. And we'd introduced it in fits and starts, but only quite sporadically and quite infrequently, because we always believed that the working in the office was the only way to work. And in the London market, you were getting the best value out of it because you were there and you were seeing people and you were available all the time. So there was probably a certain amount of naivety and maybe skepticism about the work from home thing. But, that's what happened. We were all forced into it. And we have been very surprised at how we've been able to make the change and still keep the lights on, still keep the service levels pretty decent. So I think for us, it's been an awakening of actually what's possible working remotely. And I'm sure that's the case for many businesses. And I do believe that even when the life starts to be, to return to some normality, but there will be a hell of a lot of businesses that will allow staff, a significant amount of staff, to carry on working from home, at least for some of the week, because it's been proved that it can work.
What are you guys going to do?
We haven't actually made a decision yet, Sarah, but I suspect we're probably going to be bullied into letting people working from home regularly. So that's probably what's going to happen. And, if we'd have had this conversation a year ago, I'd have been very, very sceptical that it actually can work. But, it does work. It has been shown to work. And people probably, if anything, work harder from home than they may even do in the office space. So I think we've all had a bit of an awakening and a learning piece there through the last 10 months worth of experience.
Do you think both Zoom and what we were talking about earlier, the trading platforms, are they going to change the room at Lloyds? I mean, is there any real need to go and sit in a queue anymore?
Well, that's true. I mean, it's another good question, David. I think Lloyds they have made some changes to the underwriting room. I've only actually been into the Lloyds building once since March last year. It was like a passport office with perspex shields everywhere. Where you'd normally just sit next to an underwriter at a desk. There's perspex shields everywhere. So it looks quite ridiculous, really, or very different at least. They have set up smaller areas, breakout areas, negotiating areas, more open areas. But I suspect they're going to have to make some changes, because I just don't think that there'll be the need for people to physically sit there like they did before as often as they did. I think some changes are going to be inevitable. But what that looks like, I just don't know yet. I do think that there will be probably more structured approach to, for example, during when we were approaching September last year, and there was a possibility of people returning to the offices, then they were allocating classes of business to days of the week. So, for example, they might have Monday is non-marine, Tuesday might be aviation, Wednesday might be motor or something else. So they were going down the route of actually pigeonholing certain classes for the visits. But who knows? I think changes are inevitable, but I just don't know what that looks like yet.
Do you think with the use of the platforms, sort of the savvy brokers will develop new tricks? If previously you got the best rate by having the best relationship, do you start having to get the best rate by having the best presentation on a trading platform? I don't know.
I think the whole dynamic of trade will change, I think the London market definitely seems to me to have much more of a feel of scale matters, size matters. So you're right in the suggestion there that brokers with a relationship or a size of book of business will still get the best terms. That I'm sure that exists and probably will exist. But I think it is true to say that you have to be more savvy in the way you operate, and I think you need to be getting your information from your client, understanding what their business is about, asking the right questions, and putting your presentations together in a coherent, inclusive way. And I think that's probably going to be of much more benefit going forward than it has done. I think certainly in the London market, I think there's been a tendency to be a bit sloppy about the information and just literally passing something from one place to the other without intervening or quality checking or doing much with it. So I think you're right, that could well be a feature going forward.
And on the connectivity of the platforms that they're creating to brokers' systems, I mean, are they connecting it to the standard provincial ones like Actuaris and OGI and so on? And if so, again, between that and Zoom, eventually, is there any reason why a provincial broker couldn't quite easily be a Lloyd's broker?
I think there is a chance that they might. I think the Lloyd's model has their distribution. Certainly, the information we've had from Lloyd's over the last year or two is that they are trying to push the cover holder model as a means of distributing their products out into the marketplace. So I do believe that they are looking to make that easier. The digitalisation and transformation is part of that, and it certainly will make it easier. But I think that I think the large barriers for a provincial broker is probably the learning piece of how to interact with all of the accounts and settlements and the paying of the premiums, the collecting of the claims, and setting your bank accounts up in a certain way. They're all quite specialist things that are quite different. And even brokers like us that have been in the market for a long time, we sometimes have trouble with that because they come up with changes and upgrades that are difficult. So, but I think in terms of the pure trade and the access and means of doing business, then I don't see why some provincial brokers will have an interest in going to Lloyds directly.
Yeah.
I think it's a really interesting topic, and I'm quite interested to see not just the Lloyds market, not just the wider insurance market, but actually the sort of global economy and the changes that are coming, particularly I think in SME markets, the entrepreneurial sort of startups are coming thick and fast now. And I just think the next 5 to 10 years are going to be really interesting to see where we land for a whole host of reasons. So
yeah,
quite glad I'm not my kids' age, because I don't really want to be trying to buy a house in 5 to 10 years' time.
Absolutely. I think the other thing that we've noticed as well, just on the topic of entrepreneurs and people making startups, I think if there was, I think the market dynamics will change quite dramatically, and I would also see much more of a space for smaller independent brokers. I do believe that, because I do think that smaller independent brokers do tend to be more savvy with their clients, probably, dare I say, work harder for them because they have to. I just think that probably what we need to be careful of is that one of the big burdens for the smaller brokers, the medium-sized brokers, is the regulatory and compliance landscape. And that is something that has become increasingly more burdensome. So I think if London, Lloyd's market, provincial markets, insurers everywhere in the UK particularly, if they can actually make sure that the regulatory and compliance environment is proportionate, there to protect the policyholder at all costs, but they need to try to carve away some of this layers upon layers of red tape and bureaucracy that I think drives brokers and underwriters, to distraction. So those are the things that I see as being a barrier to, a few more smaller entrants coming in and making a difference, which I think ultimately would be to clients' benefit. They would have more choice. They would have, I think, more people that are very much focused on their needs. And, it would be ironic if a compliance and regulatory environment was ultimately to be the barrier to the client having more choice themselves. So that, to me, is a huge aspect on the whole entrepreneurial startup.
I'm quite interested in how InsurTech is going to change that landscape, because one of the conversations I've had recently is about how there's some playing around with algorithms for an underwriting perspective. And you're hearing about InsurTech startups all over the place now. And I think that they might change the entire chain, the entire way that we do business. So I think entrepreneurial streak plus digital transformation, technology, plus COVID. I think COVID has pressed fast forward massively on all of these things.
Yeah.
So I think it's going to be so interesting to see where we land in a few years' time, and how sort of regulatory bodies catch up or stay ahead of the curve, whichever way you think it might go.
You think, I agree with you, the regulatory hurdle is quite a big one. Does that open a gap for networks? And have you ever considered a network? You sort of delegate some of that stuff to a network.
I don't know, Dave. I've probably not looked at the network model that closely. I suppose in our early years, because we were a London-based broker and we had enough relationships with insurers, at least, let's talk about the market side of it. We had enough relationship with insurers from our previous experience to get access to the markets we needed to get access to directly ourselves. that probably took away one of the big benefits of being part of a network, where access to market is a big selling point for them, and huge value that they bring to it. You're right, though. I think in latter years, as the networks have probably evolved their model and introduced some of these value-added services like compliance and other things, then that clearly is something to consider. I think for us, don't know is the answer. I mean, I'm open-minded on the subject. We've invested quite a bit in internal resource for compliance and regulatory matters, and we also engage the services of a specialist consultant that provides ad hoc, support and resource for things that we might need. But I do take the point that networks could well be, a good solution for that, because it is becoming an ever-increasing thing. But I just think that probably we need to look at people like BIBA and other, trade associations and groups of us to try to push back and make sure that the regulators don't overstep the mark unnecessarily so. I think that's the key point here. It's not just about how do we cope with the burden that we feel we have. It's probably starts before that. It's how do we push back to carve out what's not required. That's a challenge. It's not an easy one, but I think we need to do it. Otherwise, these things just have a habit of snowballing and getting ever more, difficult and taking too many participants out of the market.
Yeah. To Sarah's point about tech startups, that I kind of see that taking slivers off the market. If you're the FD of a sort of decent sized company, you probably need to delegate the complex matter of assessing your risks and placing them to a broker. But you can certainly get tech startups or just do this bit or just do that bit efficiently and quickly, and particularly in the personal lines area. So you can kind of see slivers getting, to a degree, Direct Line and what have you took a bottom sliver out of the whole brokering market, didn't they?
They did.
And you can see slivers coming off the sides as that happens. I'm also interested in you mentioned fallout from the big brokers. So is that just people getting tired of the awfulness of working in a great big corporation where decisions are taken 15 layers above you and possibly in a different country? Or is it the kind of the consolidator thing when small broker now finds himself part of big broker and just doesn't like it? Or whether that's it doesn't need to be small broker, does it? Willis now finds itself part of whatever, and that change throws people out. I suppose it's neither or both. I don't know. What do you find?
Yeah, I think from where we sit in the London market, for example, I think there's probably quite a lot of activity, quite a lot of moving. The London market does tend to be quite small in terms of the rumour mill and people talking and exchanging opportunities and what have you. So I think fundamentally, David, I think it's to do with people get slightly disaffected or disillusioned by not feeling as though they make a difference, that they're part of something that's much, much bigger. Therefore, their skills or what they believe they bring to the table is not recognised enough.
Yeah.
And I just feel they probably lack opportunities within that larger organisation, that they naturally tend to look elsewhere and would typically, I suppose, look to the smaller, medium-sized brokers where they're going to have, they're going to be in a smaller pond, therefore make more of a difference. And that we've experienced that, and we've had people join us directly as a result of that. So I think that is certainly a factor. And I think as more of these large consolidations take place, you mentioned the Willis and Aon one. That is a huge business. Marsh with JLT, huge business.
Yeah.
It wouldn't be for me, but that's not to say that it's for everyone. But I can understand certainly why people would feel as though they're losing touch with, what they want and what their opportunities should be. So I think that will carry on for a while.
Yeah. No, I think you're right. I think there's a general sense of that in society generally, isn't it? Everything's getting so big, you start to lose any feeling of control about anything.
Absolutely, yeah.
I think the whole landscape is going to be a really interesting one to watch. And your thoughts on it and this conversation I've really enjoyed. I think it's quite future thinking and hopefully will be of great interest to people listening. So I really, really thank you for your time. I I think it's been great.
Great. Thank you very much. It's been great to talk to you guys, actually.